Welcome once again to our continuing YouTube video series on business financing and the law. My name is Christopher Neufeld of Neufeld Legal, and in this particular video we will be discussing the financial term equity. What is equity? Equity is a conceptual term that relates to one's ownership interest in particular assets. Those assets might be represented by ownership in a business, in a corporation, in a piece of property, but it is that ownership interest. And then the determination is made as to what the valuation is. And to determine the valuation, you must effectively eliminate all the external obligations that are owed to others in that asset, that piece of property, that business, that corporation, such that you take out all the debts and other liabilities attenuated to it, and then you will have a determination as to what the collective equity is. And if there are a number of equity holders, then it is broken down on the basis of their equity interest or their percentage interest in that particular asset or property, business, or corporation. So let's take, for example, we have a business, corporation, or asset where we have equity invested in it. One might have invested $100,000 into that piece of property. Nevertheless, the $100,000 is not an ongoing determinative of the equity that one holds. What it represents is if there were two equity holders, it will represent a 50% equity interest in that piece of property. So what we would then do is at any point in time, we would look at what the full valuation of that piece of property was. So let's suppose that two individuals each invest $100,000. The property has now grown to a value of $600,000, but it is subject to $100,000 in external debts or liabilities to other parties. So that $100,000 that's owed to other parties will first need to be paid out before the equity holders can be paid out. So this reduces the collective equity value to $500,000. And given that the particular equity holder holds a 50% interest in that particular piece of property, their equity holding is now valued at $250,000. That is what their equity represents. It is not the initial amount. It is instead the current amount or the disposition amount, subject to the extraction of other debts, liabilities associated with that property, and thereafter the split amongst the equity holders in the proportions that are designated as between those equity holders. Well, I hope you found this video informative. For more information on business financing and the law, please feel free to contact us at financinglawyer.ca. Thank you.